big tech companies like Google, Amazon, Facebook, they have set a new standard on how to serve consumer needs. So if you want to add new, exciting financial services to the market today, it requires you to be agile, you have to have speed, and you have to have deep knowledge, not only from a technological perspective, but also from a compliance perspective, like financial legislation, etc. And you need to have deep insight also about the products you are about to offer. So therefore, at Enfuse, collaboration is one of our key words. We have partnered up with Openway, who have the same values as Enfuse. We have partnered up with AWS, etc. We have partnered up with card manufacturers, etc., who can help us on the journey to be quick to market. So Enfuse is a Finnish scale-up fintech company. It was founded in 2016 in Helsinki. But already from the beginning, there was a vision of preparing it globally. And we're about 50 experts, and we have grown quite rapidly over the years, and also showing black figures from the beginning, completely bootstrapped until last week when we secured our first venture capitalist to enable us on the future growth, global growth. And this hasn't gone unnoticed. We have received several awards. We were the FinTech of the Year in Finland 2018, and we also won the MasterCard Lighthouse Development Program in 2018 on a Nordic level. Our 4 values, collaboration I mentioned, sustainability, not just from an environmental perspective, but everything we do related to our relations with the customers, agreements, etc., but also from a technical perspective. We always set aside time in the sprints, etc., to remove legacy, etc. Think big. We do not just try to solve the small problem. How can we solve it in a better way? What else can we do when we are solving the issues? And also aim for excellence, always. So, what do we do? What do we offer at Enfuse? We have 2 main areas. It's the payment services, issuing, acquiring, processing, the full account life cycle. And then we have the open banking services. So we have compliance. It's rooted deep down in our DNA. So the first thing we did when the PSD2 directive came, we developed a PSD2 compliant platform for banks and other financial institutions, more or less to remove their PSD2 headache. Then we flipped the platform upside down to create a connectivity hub for TPPs with one single standardized API to fetch account information or initiate payments through other banks. Then we have also our Enfuse business services, administrative services like transaction monitoring, dispute management, needed both for open banking as well as card issuing. How we do it? We are around 50 experts. What struck me when I joined Enfuse was here is the people that have been doing like Visa certification, MasterCard certification projects. They have been running banks, CIO, etc. They have used Openway's Wayforce system before. So at Enfuse, I would say the people know where in the ecosystem our platforms fit in and how to. And there we can bring a key advantage to our customers. We see ourselves as a hub, an integrator. We therefore enable new business opportunities for our customers. Then 2 things you often relate to being cloud native or being in public cloud: scalability, save time and fast time to market. And of course, compliance. Without compliance, we wouldn't be in the business. So what we have focused on being in the cloud, of course, speed to market. I mentioned earlier that I was a part of building a brand new issuing platform. It took so many years. Running on Openway's Wayforce platform, we have all the card schema integrations. We have all the card products, whether it's prepaid, which is now hot on the market, debit, credit. We have the private setups, we have the business setups, we have installments, everything needed from what the market currently requires. And of course, standard SLA 4 nines, so we can make a difference in days or months within as previously years. Some selections of what we have done. In 3 minutes, we enabled the infrastructure for one of our customers for their end customers to download the app, apply for a credit card, do the credit approval process, identify themselves through strong customer authentication, in-app provision it to Apple Pay, enable it for high-value payments. And in 3 minutes, and the long part was the SCA. In 3 hours, another typical example of being in a cloud, we migrated 5 million cards from a legacy system onto our platform. This was normally done in a weekend or better in a long weekend where the Monday was off as well. 3 months, we implemented Apple Pay. This was the first in Finland together with Nordea Bank at the same time. Scalability. From the beginning, our aim was going global. Being in a public cloud, running on the Way4 platform enable us. And this is specifically good for the neobanks nowadays. They want to start off in their home market and rapidly expand throughout Europe, and nowadays even further. And maybe final or foremost, the security. There's, to my understanding, not a single company on the market out there spending more money on security than AWS. So tech enables the services we provide, payment service, open banking. We have our Enfuse business services to act a little bit like a one-stop shop, and then surrounded by everything, we have the Enfuse API, so always one standardized API, which we are integrating towards our customer, who we are dependent on to do the actual magic, because we do not do any B2C. And finally, being in a public cloud, it's saving costs. One of our customers have high peaks of transactions in the middle of the month, and when the peaks come, we just scale up, and when the peaks go down, we scale down. So our customers do not get charged for any unused capacity. We can follow the transaction volumes of our customer, always monitoring the last authorizations, for example, that we scale up and down accordingly. All right, Julian.
Thanks, Andreas.
Thank you.
It's interesting to see how a cloud-native company like Enfuse leverage the cloud, as Andreas said, around scalability, speed to market. But what I'd like to do is spend a few minutes actually looking at the challenges faced by companies that today aren't in the cloud, and to think, how do you take a legacy infrastructure in an in-house data center, for instance, and actually move that to the cloud? And what are the impacts, and what does that really mean? We've taken some input from Gartner, who have looked carefully at this as a case. And essentially, unsurprisingly, their findings show that if you want to move to the cloud, your costs are going to increase potentially up to 3 times before you get to a point, maybe after year 2, year 3, of making a saving. So if that's the case, why would anyone do it? There has to be a better way than just embarking on a mass migration of a legacy to a cloud, incurring all of those additional costs. And that's what I'd like to take a few minutes and look at with you. So essentially, it's how to skip those costs. So the costs don't go away, but you need to make those costs essentially pay for themselves. So you need to implement something that's going to generate revenue, bring new clients to your business, and enable you to scale up and actually essentially create a cloud environment that is cost effective and actually almost meeting its own costs, and then start on the migration to actually then remove and reduce the other existing costs that you have on the market. So the conversations that we've been having with a number of our clients, spanning a number of different industry sectors and startups and with companies like Infuse, is how do we do this? What's the best way to do it? How do we start? What cloud should we choose? What's the infrastructure? How do we overcome some of the issues that people immediately come up with today, that you can't use the card scheme interfaces in the cloud, you can't run a HSM in the cloud. All of these things are reasons that people sort of put a hold on a project of moving to the cloud. But as Andreas and Infuse have proven, in the right environment, you can do that. There are ways around it, and there are things that are changing constantly that should make it more achievable for people to actually make this move. So when people often start with the cloud, and one of the reasons costs potentially increase is to say, well, let's just put our test systems in the cloud. We've got everything else in premise, that's fine. Let's run some test systems. It's easier to install new versions, make updates and things in the cloud. It could be a good example of actually a new product, if you're an issuer, a new card product, different services within the bank, within the acquiring organization that can't necessarily be met in your current legacy environment. So actually supplement it with a cloud-based solution that enables you to add new value and new services to your clients. That way you're actually implementing a system and it's then generating money to help pay for itself. So if you're looking at what to do, you need to really keep your minds open and try and be evolutionary in your thinking rather than thinking in the constraints that most of us do find ourselves today, because that's the natural place we all feel comfortable, so we don't often think too far outside of the box. In terms of utilizing Way4, as Andreas said, our project with Infuse is essentially providing them with an environment for full processing services, covering all issuing services, which is what they have live today in the examples that Andreas made. But also moving forward, they're acquiring services and wallets and other payment services are all going to be deployed using Way4 in the cloud. So you can decide what is a pain point, what is an area that is of interest to you to start, use a technical term, playing with the cloud to see how it would actually work in your environment. And using different components of Way4, we can actually support you in doing that. We have global coverage, so we're having conversation with people with lots of different kinds of cloud. Come on to the key ones in a minute, but most companies are adopting a cloud strategy. They're picking their preferred cloud platform, either based on historic relationships with Microsoft, so they adopt Azure. There may be other requirements that mean there's issues around data at rest in countries, and different cloud providers have different solutions for that. But essentially, the conversations we're having globally all do focus on the cloud and then have different challenges around those. So essentially, one split of clouds is you have large organizations, have big enterprise infrastructure, potentially run with the likes of Oracle today. So they think, okay, Oracle Cloud is the best solution for us. It meets all of our enterprise needs, enables us to take not just payments, but lots of other infrastructure into the cloud. But what we see, and this is where startups, neobanks, and others are playing, is very much more in the immediate cloud services, the ones that are really active. So AWS is used by Infuse, or Azure, who have a model for helping with data at rest in different countries, and Google Cloud. So you need to think, what is the key goal of the organization and your drive to move to the cloud, and then select the best cloud provider for you. They are at different stages in terms of what they provide in terms of PCI compliance and meeting certain regulations, so those conversations need to be had. But as we've heard with Infuse, with AWS, they meet all of the compliance and regulatory needs. And we know Azure and Oracle are very much on that case, and probably we're having more conversations about Azure as a cloud platform than any other right now. I think the key point is that the cloud is production ready. it's not a case of you're trying some new technology to see if it can support your payments environment. It's ready to go now. We've done some testing, getting 1,000 plus TPS, and as Infuse ramp up, and as Andrea said, the ability to actually take what we refer to as capacity on demand, scale up the amount of processing you need, scale it down when you don't need it. So the period we're coming up now with Black Friday, with Christmas, you can scale up, but once that's done, you can actually reduce the amount of capacity you need. You're not sitting with a data center with lots and lots of tin that half the time isn't really actually doing anything for you. So in terms of moving to a cloud, the business models that exist today are still available, using a full outsource model with the likes of Infuse. Doing it in-house, people talk about a private cloud. That's essentially cloud infrastructure in your own data center. Or with the experience that Openway have gathered, we're able to support you with a number of managed services to actually take some of the headache away from actually doing the deployment, the testing, and things like that. So it's not changing the way you operate today, but it's giving you a lot more flexibility in terms of how you operate in a data center. So essentially, is wrapping up, the cloud is ready, it's proven, more and more companies are looking to move that way. A lot of the issues historically are going away. There are now companies offering HSM services in the cloud, so you don't have to look at co-location. So please, if this is on your radar, we'd be very happy to talk to you and understand what your concerns are and hopefully address those concerns to enable you to really embark on these projects. Thank you very much.
Thank you so much. Thank you, Jeff.
Thank you.